So I went down a rabbit hole this week that I genuinely was not prepared for. It started with a simple question: how do the Amish stay out of debt? I figured the answer would be boring, something like they just don't buy much stuff. And yeah, that's part of it. But the more I dug, the more I realized these people aren't just frugal. They built an entire financial system that quietly avoids almost every trap the rest of us fall into. And by the time I finished reading, I felt genuinely stupid about how I handle money. And it's almost embarrassing when you compare the toolkits. We have smartphones, banking apps, credit scores, retirement calculators, and entire industries built around helping us manage money. The Amish have horses, hand tools, and a community potluck. Now, that's the cartoon version, and Amish technology is honestly more nuanced than the stereotype, since plenty of communities use things like solar panels, battery power, and calculators depending on their local rules. But the basic point holds. Somehow the people with way less financial machinery are the ones not lying awake at 2 a.m. thinking about a car payment. So let me walk you through what I found, because once you see how this actually works, you can't unsee it. The first thing that stopped me cold was their relationship with buying. In a lot of the more traditional old order communities, there's a simple, almost stubborn rule: if you can't pay for it, you don't buy it. That's it. No payment plans, no 0% financing for 36 months, no swiping a credit card and figuring it out later. A buggy, a piece of furniture, a new plow, a horse. If the cash isn't there, the purchase waits. Now I know what you're thinking, because I thought it too. That's just obvious. Of course, you shouldn't buy things you can't afford. But look at your own life for a second. The average American household carries thousands of dollars in credit card balances, car loans stretched out for years, and financing on furniture, phones, and appliances. We've completely normalized buying things with money we don't have yet. Many Amish families just never agreed to that deal. Now, to be clear, they're not living in some cash-only bubble. Plenty of Amish use banks, take out mortgages, and finance their businesses, and there are even banks that specialize in Amish customers. But the everyday consumer debt machinery, the cards, the impulse financing, the buy now, pay later, is far less central to how they live. And it goes deeper than just willpower. When your community leans this heavily on cash, a lot of the temptation infrastructure that surrounds the rest of us just fades into the background. There's no stack of credit card offers in the mailbox. No buy now, pay later button at every checkout. No salesman pushing a financing package the way a car dealer pushes a loan on a new truck. The whole machine that's designed to get us comfortable with debt was mostly built for a different way of living. Saving up for something isn't a chore they grit their teeth through. For a lot of families, it's just how things have always been done, by their parents and their grandparents before them. There's also a patience to it that I think we've genuinely lost. When you have to save for a thing before you can own it, you spend weeks or months actually deciding whether you want it. Half the impulse purchases that quietly bury modern households never even happen in an Amish home, because by the time the money is there, the urge has passed. The waiting itself acts like a filter, screening out the stuff you didn't really need in the first place. There's one big exception, and it's an important one: land and homes. A young Amish family buying a farm often can't pay the full price up front, because farmland is expensive everywhere. But here's where it gets interesting, and where I started really feeling dumb. When an Amish family needs to borrow money for something big like a farm, the community is often part of the picture in a way it just isn't for the rest of us. In a lot of settlements, church districts and members have informal lending arrangements where they lend money to each other, sometimes interest-free, sometimes at very low rates. The wealthier families in a settlement can act almost like a private, no-profit bank for the younger ones starting out. Plenty of families still use regular bank loans too. But that community layer means borrowing doesn't have to start and end with a financial institution. Think about what that does. The interest you'd normally pay to a bank, that money that disappears into a financial institution for 30 years, stays inside the community instead. And because everyone knows everyone, because your lender might be sitting next to you at church on Sunday, the pressure to repay isn't about a credit score. It's about your name, your reputation, your standing among people you'll see every single week for the rest of your life. Default is almost unthinkable, not because of legal consequences, but because of social ones. And honestly, that's a kind of accountability that no banking app has ever been able to recreate. It also flips the whole emotional weight of borrowing. When you take out a loan from a bank, you're a customer, maybe even an adversary. The bank wants its interest. You want to pay as little as possible, and the whole relationship is faintly hostile. When you borrow from your community, the person lending you money actually wants you to succeed because your success strengthens the entire settlement they live in too. A young family that gets established and thrives becomes the next set of lenders for the generation after them. The money doesn't just circulate, it builds something that lasts across generations. If you're already rethinking how you've been handling your own money, you're not alone. Hit subscribe because I dig into this kind of thing every week. Now let me show you the part that really broke my brain. Insurance. Most of us pay for it constantly. Health insurance, home insurance, car insurance, life insurance. It's a steady leak out of your bank account every single month. Money you hope you never actually have to use. Many Amish communities largely opt out of commercial insurance entirely. Instead, they rely on something older and, frankly, kind of beautiful. Mutual aid. You've probably seen the famous image of a barn raising. A whole community showing up, dozens of men assembling an entire barn in a single day, while the women prepare enormous meals. That's not just a quaint tradition for tourists. That's the insurance system in action. When a family's barn burns down, they don't file a claim and wait for an adjuster. The community rebuilds it. The cost is shared in labor and materials, spread across everyone, handled directly. The same goes for medical bills. Many Amish communities have cost-sharing arrangements where large medical expenses are handled collectively by the church and its members. Some settlements even run formal aid plans, almost like an Amish-funded version of insurance, where members contribute regularly so the fund is there when someone needs it. A catastrophic hospital bill that would flatten a typical family doesn't have to land on one household alone. It gets spread out, negotiated down, and carried together. It's not a magic guarantee, and serious illness can still be a real hardship. But the difference is that you're not facing it by yourself. I sat with that for a while because it exposes something uncomfortable. We pay enormous amounts of money every month to companies, essentially betting against ourselves, hoping we'll need the coverage so the cost feels worth it. Many Amish communities replaced big chunks of that industry with a simpler agreement. They show up for each other. It doesn't catch everything, and it isn't flawless. But for a lot of families, it keeps a single stroke of bad luck from turning into total ruin. The reason it works comes down to trust. And trust is something they actually invest in. A modern insurance company has to assume everyone might be trying to cheat it, so it builds in fees, fine print, investigators, and denials. An Amish community knows every single person in it. They know who's honest, who works hard, who's genuinely struggling versus who's being careless. That intimate knowledge means there's almost no waste in the system. The money goes directly where it's needed, with no corporate middleman skimming a cut off the top to keep the lights on at a headquarters somewhere. It's insurance stripped all the way down to its original idea, which was just neighbors pooling risk so that no single family gets destroyed by bad luck. Now let's talk about kids, because this is where the long game really shows up. In most modern families, children get an allowance for chores, grow up surrounded by stuff bought on credit, and eventually take on enormous debt to get a degree that may or may not lead to a job. The Amish path looks completely different. After formal schooling, which in many Amish communities wraps up around the 8th grade, teenagers usually move into hands-on training. Family work, apprenticeships, learning a trade under someone who's already mastered it. They pick up farming, carpentry, baking, blacksmithing, sewing, running small businesses, the real practical stuff, by actually doing it. By the time an Amish teenager reaches adulthood, they often have a genuine, marketable skill that produces income right away. No 4 years of tuition, no student loans following them around like a shadow into their 30s. They learned by doing, alongside people who already knew how. So while a lot of young adults in the modern world start their financial lives already deep in the hole, owing money before they've earned a single paycheck, a young Amish adult often starts at 0 or better. They've got skills, a reputation for hard work, and a community ready to help them get established. That head start compounds over an entire lifetime. And it connects directly to the next thing I noticed. A lot of these communities build instead of buy. A huge portion of what a typical household spends money on, they simply make themselves or get from a neighbor. Furniture is built by hand, often by someone in the family or a local craftsman. Homes are constructed by the community. Tools are repaired rather than replaced. Food is grown, raised, preserved, and stored. Every single one of those things is money that, in your life and mine, flows out to a store, a manufacturer, or a lender. In an Amish community, that money either never leaves the household or it circulates among neighbors and stays local. They've quietly plugged most of the holes that the rest of us are constantly pouring money through. But underneath all of these systems, the cash rule, the community loans, the mutual aid, the skills, the building instead of buying, there's one idea holding the whole thing together. And it might be the hardest one for us to accept. The idea of enough. In the world most of us live in, there's no ceiling. There's always a nicer car, a bigger house, a newer phone, a better version of the thing you already own. The entire economy runs on convincing you that what you have isn't quite enough yet. And a lot of debt isn't really about needs, it's about keeping up. It's about status, comparison, the quiet pressure of seeing what everyone else has. Many Amish communities deliberately keep that pressure turned way down. Limiting consumption isn't framed as a painful sacrifice. It's a value, a virtue even. There's little room for competing over the flashiest buggy or the most expensive furniture, because that kind of showing off runs against what the community believes in. When you pull status competition out of the equation, you pull out a massive driver of debt that most of us don't even realize is steering our decisions. And that was the moment it really hit me. The Amish aren't financially secure because they have some secret money trick. They're secure because they opted out of the entire game we've all agreed to play without ever really choosing to. So the obvious question is, what do we do with this? Because I'm not about to give up electricity, and I'm guessing you aren't either. You can't just become Amish, but you don't have to. The principles work even if the lifestyle doesn't fit. You can adopt the cash rule for the things that quietly wreck budgets, like cars and consumer junk, and refuse to finance lifestyle purchases. You can build your own version of community, people you genuinely help and who help you, instead of outsourcing every problem to a company. You can teach the kids in your life that skills and work create freedom, while debt quietly takes it away. You can repair before you replace, make before you buy, and most of all, you can sit with that radical, almost forgotten idea of enough. Because at the end of all this, here's what stuck with me. A group of people who reject almost everything we consider modern progress have somehow held on to the one thing a lot of us are desperately chasing: financial peace. They got there not with apps or hacks or side hustles, but by building their lives around community, patience, and living within their means. And that's why, after all my research, I closed my laptop feeling a little bit stupid. Not because the Amish are doing something impossibly complicated, but because they're doing something so simple that we somehow forgot it was even an option.